Welcome back to the channel, guys. Sorry it's been a while since I've posted a video, partly due to the holidays, but mainly because I've been suffering from a horrible nightmare situation of a kidney stone, as many of you in the Discord community. It's taken me a while to recover. The stone is finally out and I'm on the road to recovery now. So hopefully I can get through these videos. I've got a lot planned. I've been busy in the background, still talking to the fund managers and still actively providing some feedback to them and things like that. So I committed to doing these monthly, so I'm going to continue to do that. I'm going to start off with IncomeShares versus competitors. I have chased RecShares regarding their data as well. So as soon as I get that data from RecShares, I'll also get that video out as well. Okay, so let's start off with kind of as a summary what's happened over the month of December. So this is from November the 28th to December the 31st. There's no real surprise for me in some of the winners and the losers this month. So it's silver, 25%. Great run for silver. I think I called out a few months ago, in fact, maybe over 6 months ago, that I felt silver was undervalued and I felt like money was going to come into silver, and it's starting to kind of show. NVIDIA has had a good recovery at 5.9%, and then surprise for me probably on this list was Meta at around 4.4%, because I know they've been struggling with the AI side of things recently. The losing assets, I guess there's no great surprises here. Crypto was struggling in December still. So Coinbase down 17%, MicroStrategy down 14%, and Broadcom, which was again probably the surprise on the loser list, was 14%, but it had quite a rally. So maybe this is a bit of a correction there. Regarding crypto, I'm recording this on January the 14th, and at this time, crypto is starting to recover a little bit. So maybe Coinbase and MicroStrategy numbers will look a little bit better in January. Now, all the numbers here, remember, are total return percentage numbers. So it does include the dividends or distributions associated. Okay, let's start to focus on our first asset, which is silver. So IncomeShares did 25.7%. Another competitor in the space did 23.56%, and the underlying asset did 25.8%. We can see how it's stayed fairly close to the underlying asset here. The underlying asset still has outperformed, and that's probably because silver has had some real big pushes. But it's good to see that when it comes to the commodities, we're staying very closely aligned. So I almost feel like it's becoming a good hedge, because you're getting the silver, the ability exposure to silver or gold, but you're also getting that fairly close, good total returns, and you're still generating some income from it. So that's nice. If we look at NVIDIA, as I said, it's had a bit of a recovery in December, and IncomeShares is 5.9%, YieldMax 5.5%, and the underlying 5.37%. So it's good to see that IncomeShares and YieldMax have actually managed to outperform the underlying asset. But again, to see all of them in the positive is good. Meta, as I said, Meta was an interesting one for me. IncomeShares did 4.42%. YieldMax struggled to do 1%, and the underlying asset did 2%. So actually, IncomeShares did really well here in terms of the outperformance. I'm not quite 100% sure what's caused that outperformance, but I'm wondering whether this 25% sleeve they're using, plus the income generation, is really working, plus the change of being able to roll the calls now, is really starting to show dividends, pardon the pun, in terms of their performance. Time will tell, obviously, and this is only a month's snapshot, remember. I may start to do quarterly snapshots as well, so we can see if you were to do a netted effect over a quarter, what would it look like, taking out some of the peaks and troughs. I think the peaks and troughs matter probably more for the crypto funds, where crypto is that more volatile, and you probably do need to take out these monthly swings. Gold, as we said, again, the underlying asset has outperformed at 2.17%. IncomeShares has done fairly well at almost 2%, and another peer in the space has done 0.36%. So again, they've done pretty well to keep quite closely aligned to the underlying asset from a total returns perspective. Amazon next. So again, IncomeShares have done really well, and so is YieldMax, to be fair. Both of them have outperformed the underlying asset by a margin here. IncomeShares has done 1.75% and YieldMax 0.36%, but the underlying asset has done 1%. Now, this isn't uncommon for the strategies and option strategies in general. So when we find that the underlying being slightly down, they can outperform due to the kind of the options premiums, giving them that kind of advantage. So it's not greatly surprising to see that, but again, it's still advantageous for options. AMD next, income shares, again, 0.92%. Here, YieldMax have actually done better at 0.99%. And the underlying asset, again, was negative 1.55%. So again, income shares and YieldMax both outperformed the underlying asset by a margin. And YieldMax just pipped income shares there by a small percentage. Okay, if we start to look at the Magnificent Seven, income shares didn't do the best this month. The index did 0.71. YieldMax did better than the index, almost 1%. But income shares for me didn't do 0.26%. So not sure what's happened there. Not the greatest of performance compared to the others there. Okay, if we start to look at the S&P 500, so the 0DTE fund, interestingly, the underlying asset only did 0.08%, but income shares did almost a percentage. So it is outperforming. And I know there's a lot of people who still have concerns around the 0DTEs and the puts. I think hopefully people are seeing it's not the puts that are causing the problem. It's the aggressive nature of the 0DTEs that are actually causing the problem from a total returns perspective, because I know a lot of people were struggling between puts and covered calls. So we can actually see that a lot of the time it was the 0DTE that was causing the aggressive decay. But it'll be interesting to see regularly whether these funds are performing. I'm going to try and do an updated video on total returns for the puts, because I know that's something people have asked for and I didn't get around to it before I got sick. So I will come back and revisit that one. Okay, if we now look at the QQQ, again, income shares was negative 4.42%. The underlying asset was negative 6.67%. Interestingly, the YieldMax version of this fund actually ended up becoming positive at almost 1%. So again, not sure quite what's going on there. Good to see that income shares is still outperforming the underlying asset, even though both were negative. Okay, Microsoft next. Interestingly, income shares is the only one that had a positive return here of 0.87%. YieldMax had a negative 0.8%. Underlying asset was down 1.71%. So we can see the general market wasn't the best for December. But what was good to see was YieldMax and income shares both outperformed the underlying asset. But it was good to see income shares actually even had a positive return, a total return. So that was good to see. Okay, treasuries now. So looking at the treasuries, we can see that here the peer outperformed at 0.46%. The underlying asset didn't do great at negative 2.65%. YieldMax did okay at 0.46%, so it was positive, which is good. Income shares again struggled here. It did manage to outperform the underlying by a margin of 2%, but again, it was negative for that period. So again, we'll see interestingly how this treasury works out long term and over a period of time. Alphabet, Google next. Again, the only one that was positive here was income shares. So it managed just into the positive territory at 0.1%. YieldMax was negative 1.65%. Underlying asset negative 2.18%. But the good thing again here is income shares and YieldMax have both outperformed the underlying asset here. So again, it's good to see that these cover call strategies, the income is showing that they can outperform when the underlying is slightly down. Apple next, again, all of them are in the red here. Income shares being the least red at negative 1.59%, YieldMax 2%, and the underlying asset 2.5%. But again, good to see that, again, YieldMax and income shares are outperforming the underlying asset here. But we can see how that income is helping offset some of the losses. Palantir next, again, everything is in the red. This time, YieldMax edges out slightly in front at negative 2%, income shares 2.69%, and underlying negative 2.56%. So in this unusual scenario here, income shares has not managed to beat the underlying asset in terms of outperformance, all being negative, but YieldMax outwins there at negative 2%. But again, it's all very close. Okay, if we look at Bar now, Alibaba took quite a hit in December. The underlying asset is down 6.82%. YieldMax again wins here at negative 4.34%. Income shares at negative 4.8%. So again, both YieldMax and income shares have outperformed the underlying asset. Again, fairly close between income shares and YieldMax. but YieldMax wins it. Okay, getting into the crypto funds now. MicroStrategy, again, took a hammering in December, negative 14%. YieldMax, negative 9.8%. IncomeShares did the best here at negative 5.79%. Now, what's interesting here is the volatility and the strategies making a big difference here, because we can actually see there is quite a substantial gap now between the IncomeShares outperformance against how the underlying asset did and even the IncomeShares. We're talking about the 4-5% difference between YieldMax underlying asset, but we're almost talking about a 10% difference between IncomeShares, the underlying asset, and another 5% between IncomeShares and YieldMax. So that is really good to see, actually. And again, whether the sleeve is making a difference here, I don't know, or some strategies that are making a difference here, but one to keep a kind of closer eye on. And that doesn't repeat itself in the Coinbase directly between IncomeShares and YieldMax, but it does the underlying asset. So again, IncomeShares down 10.64% in December, YieldMax down 12.91%, but the underlying asset was down 17%. So again, what people need to realize is when we see all these, in quotes, NAV erosion, a lot of it's coming from not the strategy, but a lot of the time it's coming from the underlying asset going down. So these still are bullish strategies on the underlying itself, and this just proves that point. And this is why I want to keep these numbers out there, because I want people to understand. A lot of people blame the fund managers, oh, they're performing really badly, but we can actually see they're actually aligned fairly closely. And in fact, in a lot of cases, when the underlying asset is performing badly, they're actually outperforming it, and that might even be a slight positive return or negative, but much less. It's really, these are good hedges in a way. So again, just something to keep in mind. Oh, if we look at Broadcom, again, Broadcom, as I said, had the worst December. The underlying asset went down 13.95%. The peer actually did the best here at negative 12.5%. IncomeShares fairly close to actually the underlying asset at 13.92%. Okay, so in terms of a summary, so December highlighted the protective power of option strategies, okay? With many of the underlying assets negative, AMD, Microsoft, Coinbase, IncomeShares consistently delivered positive or cushioned returns in those corresponding funds. Silver was still the shout-out winner, standout winner, rallying over 25%. So there you go, guys. Hopefully that was useful. As always, nothing here is financial advice. Do your own homework. It's for educational purposes only, and I will catch you on the next one.